Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap with me, Ryan Huang. We've got some green on the screen with some good news on the trade front. So let's jump into the benchmark numbers. The Dow Jones Industrial Average is up 0.8%. That's around 300 points higher at 40,528. The S&P 500 gained 0.6% to 5,561. And both indexes are now on a 6-day winning streak, the longest since July. The Nasdaq Composite is up 0.6% at 17,461. So the longest winning streak since July for the Dow and the longest since November for the S&P 500. For more insights, we are joined by Joseph Sroka. He is the Chief Investment Officer and co-founder of NovaPoint Capital. Joseph, thanks for joining us on the show today. How have you been doing?
I've been doing great, Ryan. It's great to be on this morning.
Great to have you on, Joseph. And markets have been doing pretty great these days as well. The S&P 500 on its 6th consecutive day of green. What's going on in the markets right now, especially with the backdrop of where tariffs and all the talk around a deal is going?
Yeah, I think it's a combination of two things because this is a really busy week in the United States market. There's about 180 companies in the S&P 500 reporting earnings this week, including several of the Mag 7 names. And really, the earnings season has been good so far. So as company after company comes out and announces either, positive earnings for the quarter or, gives a fairly upbeat outlook for the rest of the year, that's helping the stock market stay in the green. As well as you mentioned, there's potentially a trade deal on the table. The Secretary of Commerce here in the United States, Howard Lutnick, said this afternoon, and that's sort of what kicked the market up in the afternoon, that they had their first trade deal with one of the countries. He said he couldn't name the country, though, because their leaders of that country hadn't approved the announcement of the deal yet. Most likely, it's probably one of the ones that has repeatedly been mentioned as coming along well. India, Japan, South Korea, likely one of those countries.
Yeah, in his words, he says, I have a deal done, but I need to wait for the Prime Minister and their parliament to give their approval, which he expects shortly. So maybe more good news in the pipeline to look out for. All right, you mentioned earnings have been better than expected to some extent. I'm looking at some data last week about the U.S. consumer, and going by those numbers, for example, you have the Conference Board's gauge of confidence is dropped in April to an almost 5-year low. And you have also, alongside that, the numbers from the sentiment index from the University of Michigan. That's also showing one of its lowest readings on record. So how do you square these things together?
Well, I would say despite having 6 days of, positive returns in the stock market, we're certainly not out of the woods yet. Even a lot of the economic data we're going to see this week isn't going to fully incorporate any tariffs at all. I mean, first quarter GDP for economic growth comes out tomorrow. That's barely going to have any tariffs in it, just some of the China, Mexico, Canada tariffs initially, because remember, everything else came out the first week of April. So it's that fear of the unknown that I think gives consumers pause, the fear of, potentially what happens with the labor market. If the tariffs start to take a toll on the economy, will there be a lot of layoffs? UPS, United Parcel Service, announced today when they announced their earnings that they were going to be doing about 20,000 layoffs because of reduced volumes of shipping, and that's something that we can tie to tariffs. So I think it's that fear of the unknown in the near future that's really weighing on consumers in the data that you're seeing.
Yeah, that's a very good point. So the earnings are a reflection of the past quarter, not really pressing in what's to come. And to that point, you've seen already 73% of companies beating expectations on the earnings side, at least on the S&P 500, and 64% of them exceeding revenue expectations. So that is versus the outlook and the sometimes withdrawal of guidances we've been seeing. So there's still that caution in the air, I suppose. How's that going to affect the markets when you have all these uncertainties and all the lack of clarity when it comes to trade deals and where tariffs are going? How is it going to affect the rest of the year when it comes to how much upside there is for the S&P 500?
Yeah, I mean, certainly we've had sort of hit of investor sentiment. If you go back to early April, there's a survey that gets done in the United States, the American Association of Individual Investors, their sentiment indicator. That saw its most bearish sentiment in the first week of April. It's still bearish, around 55% bearish, but it's come off, its worst reading of 61.9, which was the first week of April. So I think, one trade deal, two trade deals, more companies saying, we're not as fearful of the future. That sort of cycle tends to feed on itself. And when more people are optimistic and hear other optimistic things, that's going to have a positive effect on the market. Plus, like I said, if you go back to the first week of April, right after the Liberation Day tariffs were announced, that's when there was the most fear. That's when there was the most uncertainty. Every incremental piece of certainty that comes beyond that, generally is going to be a positive.
Right, talking about positive things to look out for. We've got data, like you outlined earlier. We've got the GDP numbers out in the coming days. You've got the personal consumption expenditures price index also due, plus the non-farm payrolls at the end of the week. What sort of numbers are you looking at? Are we due for any bright spots here?
Well, certainly, like I said, first quarter GDP is most likely going to be positive because it had very little impact of tariffs. And if anything, there's a potential that some companies may have been buying inventory ahead, which would be a positive contribution to GDP. And then personal consumptions, that's our inflation measure that the Federal Reserve prefers to look at. That's still going to be reasonably in line because we really haven't seen, especially that's a March number, we haven't seen a lot of inflation push through the system yet. It's this fear of inflation, or what the Federal Reserve Chairman Jerome Powell has said is, that he believes tariffs to be inflationary. And that most likely could be the case, but we're still on a 90-day pause with most of the tariffs that were announced the first week of April. So the question is, how much inflation, how long does it last? Because at the same time, we haven't seen it push through in prices yet. We're already starting to negotiate trade deals. And so there just could be a small pocket of inflation or a small pocket of economic weakness. But if we're already getting good news on the other side of that, investors are going to look right through it.
All right, talking about what's on the table for investors to look at, where are you looking at when it comes to the opportunities to find value as well as to find safety?
Yeah, no, I certainly think the more domestic-focused industries in the United States are going to be the most immune from tariffs. So we've got things like the utility industry. Certainly the demand for electricity continues to go up in the United States. And if part of the effect of the tariffs is to onshore more manufacturing in the United States, as we've seen a lot of companies make announcements that they're going to build manufacturing facilities in the United States. That's going to contribute to more need for energy in the United States. And then, the other thing to think about is, the United States is energy independent from an oil and gas standpoint. So certainly that would be tariff immune. So there's lots of areas, more on the domestic side. And then one that's really interesting is the discount retailers. A lot of those have bought inventory a long time ago, especially like in apparel, like a TJ Maxx or a Ross Stores. And they basically have a whole inventory full of pre-tariff goods that are going to get sold over the next 12 months. So there's lots of sort of tariff immune things that I think bode well for earnings in the near term. But the flip side is, the market's a forward-looking mechanism. As we start to get trade deals secured, regardless of the fact if there may be a few months of weakness or a few months of inflation, the market's going to start to look right through it, and there's going to be opportunities, in beaten-down sectors, in technology and communication services, manufacturing, consumer discretionary.
All right, a good list of where to look at if you're in the markets for any opportunities right now. Lots going on as well as we look for more details on trade deals to be done with all the tariff tensions. And we've been in conversation with Joseph Sroka. He is the Chief Investment Officer and co-founder for NovaPoint Capital. Joseph, thanks for your time as always, and thank you so much for insights this morning.
Thank you, Ryan. Have a great day.
You too. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.